Okay, so you bought a stock, you were selling covered calls, making good steady money, and now the stock has went down a lot more than you would like it to, and you can't get any covered call premium or very little covered call premium. What are you going to do? Well, I'm going to show you a few things that you can do to make this a better situation for you. One, I'm going to show you a covered call strategy that you can still deploy even against a stock that is tanking while you wait for it to recover, right? I'm going to show you another strategy on how to prepare for that recovery so when it does start to move back up for you, you can recover even quicker. Okay, and also during that time you can make more covered call premium than you were making previously. Two very important points. And then number three, I'm going to show you how to avoid this situation altogether so you don't get stuck like this again. All right, let's get started. All right, I'm actually going to start with point number three, and that is make sure you pick a good stock for selling covered calls. All right, very, very important. If you have an AI speculative stock or a crypto speculative stock, that's not really a good candidate for selling covered calls, right? You want to pick a good quality stock that's in an uptrend and gives you relative confidence that it will recover and will continue going up over time, right? Crypto stock speculative cannot do that. AI speculative, they could crash and go to zero, a lot of those, and you'll lose everything. So to buy that to sell covered calls seems kind of silly in my opinion. I don't buy anything ever except for quality stocks that are in the S&P 500. Okay, if you don't know how to select a stock, I'll put a link below. I have a video on this channel. You can watch how to select stocks for covered calls. But it is very, very important that the first thing you do when buying a stock to sell covered calls is make sure you buy a quality stock. Okay. Hey, real quick, I just decided to add a free cheat sheet for you if you want the entire framework that I follow to trade the markets in every phase and every cycle. Okay, I just included a free cheat sheet for you to use. You can get it below by clicking on the first link in the description. I hope this helps. Okay, the next concept I want to share with you is this. Let's just say you bought this Netflix and you've been selling covered calls successfully and you wrote it up, and now you end up stuck with it where you bought it back up here and you're trying to sell covered calls slightly out of the money and you can't do it because the stock has moved down so harshly against you, right? Well, what is a good strategy for that? What can you do now, right? I'm selling weekly covered calls and I'm getting good money. Now I can only get 2 cents for selling these calls. Literally, that's what can happen many times, right? But what are you going to do? Well, there's only one thing you can do, and that is instead of selling weekly calls or bi-weekly or monthly, you got to go out further in time, right? So now let's just say you have it. Let's just say you bought it right there. This is reality. This is where it's at, right? So if you were to go out, we'll just say 1 week and go out to January 8th, let's see what kind of money you're going to get. You got to sell it right here. $130 strike on Netflix. I go to barchart.com, put in Netflix and look up 2 weeks. This is actually 2 weeks out, I believe. Yep, this is 2 weeks out. And I go to 134. Well, I'm going to get 3 cents. Not very exciting, right? So you own this stock here, you lost all this money, you sell a covered call right here and you get 3 cents. Well, what's the next thing you can do? I can go out a little further, or gee, I can go out all the way up to 30 days, right? We'll go out to February 2nd. When are you going to get February 2nd? Well, February 2nd, let's check that one out. Let's just say February, well, the close one is the 6th at 134 on February 6th expiration date. You're going to get, oh, it's not available. You do 135. You're going to give out 11 cents, right? Still not that exciting. So the best thing to do in these situations, and this, number one is don't get in this situation, right? Study the market so you understand it's ebbs and flows, not just how to buy and sell covered calls, because as you can see, that one little tactic does not make you a market master by any means. And there's just a matter of time before this big joyride of profits turns into a big loss and discontent, right? And then we don't want to go down that road. So I've been down this road and it's not fun. I don't go down this road anymore. And if I did, this is how I got out of it, right? I've been doing this for over 30 years. I've done lots of things have gone wrong. Here's a way to get out of it. So what you can do is you can take this covered call, right? Instead of selling it for a week out or 2 weeks out, you're going to go about 30 to 45 days out. So let's just say we go close to that, which would be around February 20th. Okay, and then we're going to sell what is called the 8 delta covered call. Now, if you don't know what an 8 delta is, you need to go watch the video on delta below. I have a link and learn how delta works. So what you're going to do is go to February 20th on this example. You're going to go out to an 8 delta. Let's see where the 8 delta is. Here's delta. 8 delta would be right around here. We're going to look at here. 112 would be about the 8 delta. So you'd be getting 53 cents for that option, right? Now, I know that's not earth shattering, okay? That's as good as it's going to get when you're in this situation. So now 53 cents, let's just say you're doing it on a 30-day, divided by your 134, I'm doing this on a calculator over here, times 12, you're getting about 5% return on your money. It's not terrible, right? You're making through. You're not just sitting here taking a loss, making no money. You're making 5% on your money, and sometimes more, right? When IV goes up, you're going to make more, sometimes less, but right now you're getting 53 cents. That's what you're going to do. So now you're going to go sell this 8 delta, and the 8 delta is at what? It's at 112 right here, right? 112, 8 delta. So you're going to sell that covered call. Instead of way up here, you're selling it right here. You're selling it right around here. Okay, so you're stuck holding the stock. You bought it up here. You're stuck holding it down here. You can't get any covered call money, or you're going to sell at 8 delta. Why way up there? Because you don't want this thing to spike up on some big news and all of a sudden you get called out for a loss. You don't want to get called out here, right? You wanted to sell it at 8 delta. If this price starts approaching it, then you're going to roll this call out 2 more weeks and roll it up a little bit, right? And you're going to keep doing that as the stock climbs. It climbs further. You're going to roll this out a little bit further and up a little bit higher. And you're going to keep pushing it out to an 8 delta. And you always want to keep it 30 to 45 days out. Closer to 45 the better, right? So it starts approaching, you push it up and out. And that's all you do until you work your way back. Now, if this stock happens to go down further, well, you know what you can do? You can roll this option back down to an 8 delta and continue making gains while it goes lower, right? And then when it starts to recover, you start rolling it back up again. Now, these are techniques you need to know. I'm assuming you're a skilled options trader already. And if you are, you may not be skilled in this tactic, but you need to start practicing it because this will help you get out of these jams here with a much better mindset, which is very important to successful trading, keeping your mind properly placed for success. And when this happens, a lot of people get disgusted and sell and take this big loss, and that's very, very bad for your portfolio. And then sometimes they'll just quit trading altogether and never make that money back. So this is a plan, right? It's not the best plan in the world. There is no great plan. There's nothing you can do when a stock goes that hard against you that's just going to give you your money back. You have to work your way out of it, all right? So I'm going to go back and show you one more time how this works. You're going to sell an 8 delta at 112 with a 30 to 45 days out, right? And as the stock starts moving its way back up and starts to get close, you're going to roll it out to another 45 days and out and up to a new 8 delta, right? And you're going to keep rolling it up and out, up and out. Every time the stock moves closer and the time starts ticking down, gets close to this expiration date, you're never going to want to let it get more than a week or 10 days into this expiration date, right? If it's got 10 days left, you need to move it out and up, right? Don't let it get too close. You don't want to get assigned. You don't want to get called out here because if you do, you take this big loss. And when you take that big loss, it's not good for your portfolio. Now, if you did happen to say, hey, gee, I was on vacation and I couldn't roll it up and out and I got called out, not a big deal. You just buy it back immediately, right? You don't say, well, gee, I'm losing $5 or $3. You buy it back, you just suck it up. That's part of trading. And you continue to roll up and out until you make it back, right? And now if you say you got called out and you had to buy it back and a few dollar difference, we'll just add that back onto your cost basis now. That's your new cost basis. Now your cost basis is up here instead of down here because you got called out once and lost a little bit of money. But you just keep doing that at 8 delta, right? Until you get whole again. And then you continue to do what you were doing from there, making a lot of money. Hope that helps. I got one more tactic I'm going to show you, and let's get on to that. Okay, another thing I've done when in situations like this is I would take the stock, right? Say I've just been trading like you were, and I got up here and I own it now, and now it's plummeted. And I'm like, gee, I'm stuck holding the stock. It's a quality stock because I did my due diligence. I know how to pick stocks, and I have one that's going to recover in time. I don't know how soon it's going to do it, but I know eventually it will recover. Right? So what am I going to do? Well, I want to recover quicker. So I'm going to do the cover call technique I just showed you, where I'm just going to keep leveraging and inching my way up and keep rolling and rolling until I finally get back whole again. But I also want to accelerate that process. Now, some of you might say, well, gee, I'm making call money. That accelerates. Sure, you can add that in if you want to, but I'm not counting that. That's just bonus money. Here's what I would do. I would take this stock right here at its low. And once it starts to recover, right, and everybody has their own idea of what recovery means and a new uptrend means. Some people say, gee, a higher high, a higher low, and another higher high, which is called the 1, 2, 3 reversal. I don't know if you are familiar with it. A lot of people like that to start a new uptrend. I'm not necessarily saying use that. Some people use this trend line here, the 250-day exponential moving average, right? If it breaks above that, it's trending up. If it breaks below it, it's trending down. Or if the line itself is pointing up, it means it's up. So you can do any way you want. I'm not favoring one over the other. I tend to have different ones for different times in the market, different cycles, and different ones for different types of stocks or different industries. So they all are something you have to just study, practice, and learn. Again, these are skills, right? There's no set it, forget it, automatic way to make money with cover calls or cash secured puts or any other trading style, right? People want to learn just a one trick that says I can just keep doing this over and over. Well, you can't. It's just not that easy. I'm sorry to tell you that, but you got to learn the overall market. You got to know how the whole thing works so you can keep extracting money out of it, okay? And that's how you don't even get into these jams that we're going over right now. But let's just say we are in this jam, and here's what I would do. I would take half of this position once the new uptrend was established. You know, whatever parameter you want to use to say this is now into a new uptrend. What I would do then is sell half of these shares, and I would take this loss on half of them, right? And with that money, I would go buy LEAPS contracts 2 years out. So now I have, well, let's just say with the money I got, I can buy 2 contracts. So now I have half my shares, and I have 2 LEAPS contracts. So I have 2.5 times what I used to have, right? So now with the half the shares and the 2 LEAPS contracts, now I have 2.5 times what I used to have, and I'm selling cover calls against it. So now, instead of getting the 53 cents that we talked about when we sell cover calls, we're going to get times 2.5. We're going to get $1.32. So that helps us get our money back quicker, right? We've almost tripled our cover call income with that little trick. So now instead of getting a 5% return, now we're making a 15% return on our money, right? Now, if you had a dividend stock, you'd be getting a dividend along the way too. This particular stock doesn't pay a dividend. But if you were getting a dividend, you'd be getting that, and you'd be getting this 15% cover call dividend or cover call income at the same time. But even as exciting as that is, the more exciting part is when this stock starts to move up, those LEAP options are going to move up much quicker, okay? So now you have a stock position that you took a loss on, so you can use that to get your capital gains, get some tax savings out of that. And now you can ride this next trend up to the top again, and your horse is going to go faster than everybody else's horse who is just a stock horse, because you are now taking your stock, you've added an accelerator to it with a couple of LEAP options, and now you're moving 2.5 times as fast, we'll say, as the market as it recovers, while making almost triple the cover call income. Okay, I hope that makes sense. You have to have an understanding of LEAPS, you have to have an understanding of cover calls, you have to have an understanding of how the market works in order to understand this concept, but it is a really good one. Okay, it has one downfall, and that is if the market continues to go down and you hold those LEAPS, they're going to go down much faster than the market. So you got to have the stomach for that. How do you have the stomach for that? You just anticipate it. This is what I'm signing up for. I've sold half my shares. I'm converting them to high leverage LEAPS, right? I do LEAPS at 60 delta, 50 delta at a strong pullback, right? And now I'm going to ride these up. But if it goes down, if it's not done going down and I was wrong on my uptrend, now I'm going to take more pain than I've ever been taking, right? You're still going to have 3 times as many positions to sell those cover calls against, so that's going to feel a little bit better. But this value is going to drop quicker because of the LEAPS. So just know that, and that's why it's so important of knowing I have a good quality stock, right? I have Netflix. It's going to recover. It's just a matter of time. I have to ride it out. That's why I did a 2-year LEAPS option, right? So I have 2 years to be right on this and for it to correct. All right, very powerful strategy. I hope I'm making sense. If not, put some questions in the comments. I'll be happy to answer them. Thank you for tuning in. I'll have more coming soon. Okay, make sure you download the free cheat sheet below. Okay, this is a guide for you to use. It gives a framework that I follow to trade the markets throughout every phase and every cycle, right? You can't just do one strategy all the time. You have to have multiple strategies if you really want to crush the market. So this free cheat sheet, it's the first link in the description underneath this video. You'll see it in the description. So go there, download that. I hope it helps you. I hope it turns you into a better trader, and I'll talk to you soon. Hey, just a reminder,